Hello, my friends, and welcome on our webinar about basics of the Forex market. Please, before we start, if you can confirm on the chat that you can hear me, that everything is okay with audio and video, that you can see the first slide of the presentation, that you can hear me, that you can see me. So please confirm on the chat and we will be able to start our webinar. Excellent, thanks very much. So let's start. Yes, today we'll talk about the basics of the Forex market. Please, if you could tell me on the chat if you are demo trading or you're not trading at all, or you maybe have a real account already and you trade on the real market. I would like to know what is your trading experience, if you already traded or you are just about to trade, and that I will know better. Well, today we will talk only about basics. So if you have a real account and you're trading for some time, maybe I will not have anything, any new information for you, but I hope that you will enjoy this webinar anyway. And I will show you why. I will tell you why you have big chances to enjoy this webinar. So let's start. The reason why you can enjoy this webinar is that it will be done by a real professional trader, myself, because many of the webinars done by the Forex companies are done by just employees who have knowledge, of course, but they don't necessarily trade on a real account. They probably trade on my account, etc. And in order to get the proper knowledge, you need to get this knowledge from a person who is trading for many years, who has necessary experience, who has necessary knowledge. Because trading on a real account for many years and having profits is completely different from trading on a demo account for 1 week or even 5 years or even 10 years on demo account. It does not mean anything really. So that's me. I need to introduce myself because you would like to know who is teaching, who is giving you knowledge. You don't want to be your mentor, your teacher, to be a guy who is not trading live, for example. So apart from trading, I also do seminars, webinars for last 10 years. I'm also in the media, writing articles, giving interviews in TV, etc., etc. So you're in good hands, my friends. Let's start about the Forex market, about the basics of the Forex market. So Forex is a shortcut. Forex is a shortcut from foreign exchange. And Forex has also shortcut itself. It's FX. So it's a place where investors, speculators, importers, exporters, they exchange, so buy or sell currencies. And it is by far the biggest financial market in the world, and it has the most dynamic growth recently, apart from cryptocurrencies, of course, especially now with Bitcoin on all-time highs. So if you could tell me who are the market participants, like we have four main groups of market participants. If you could tell me who are the main market participants on the market, if you can write on the chat. If no, then here you have pictures which will help you to tell me who are the main market participants. So here, upper right, here, what is this group of market participants, please? Governments, yes, exactly, governments. So governments enter the Forex market because, for example, governments are borrowing money from international institutions, for example. So when they borrow money, they need to enter the Forex market. in order to receive this money. Now here on the right, top right corner, this group here, speculators, thank you very much. So this is various financial institutions which trade currencies for speculative purposes, right? So they buy or sell currencies solely for profit. Here on the left, bottom left, traders, retail traders, yes, so me, you, those guys who trade on their own account, small volumes, and yes, me, retailer, exactly. And the last group of Forex market participants are exporters and importers, so companies producing, for example, goods. When a company producing bikes in Germany, they sell goods to Japan, they get money in yen, they need to exchange it to euros because they need to pay with those euros to their employees. So importers and exporters are also participating in the Forex market. Beautiful, thank you very much. About the retail traders, about us, about small guys in the market like us, we are about 3.5, 3.8% of the turnover on the market, with Japan as an undisputed champion in this category. So in Japan, there are many retail traders. At the beginning, Forex market was closed for retail traders because small guys like us were not attractive for the interbank market. But later brokers decided to group up the low volume trades, and they forwarded them to the interbank market. So it allowed us to trade to be an attractive partner for trading. Okay, so Forex market is open 24/7. Actually, it's open 24/5, so it's open for 5 days a week, all day, all night. Why is that? Because the Earth is round. Well, some people say that the Earth is flat, but Earth is round, so there's a trading day in Japan or Southeast Asia, Australia. Then we are still sleeping in Europe and Africa, and then it moves to Americas, right? So about when do we trade? We trade. I guess that most of people here, correct me if I'm wrong, are from Middle East or Africa. So for us, trading day starts when New Zealand starts trading in Australia. So for us, it's Sunday evening, late evening on Sunday. Then they start trading. Then it moves to Asia, Japan, Tokyo, Singapore, Shanghai, Kuala Lumpur, all those big trading centers. Then Middle East, then the biggest trading centers for currencies, Frankfurt, London. Then it moves to Americas, New York, Los Angeles, New York, Chicago, Los Angeles, and then it moves again to Asia. And for us, for traders in Africa and Europe, we share the same time zone. Trading ends when there is end of the day, end of Friday in America, in United States, and for us, it's late evening on Friday. So for us, from our perspective, trading starts late evening on Sunday and finishes late evening on Friday. The center of the currency trading is London. It's not New York, it's not Wall Street, it's London. Most of the turnover is done in London. Who can tell me why London? Why London? Why do you think London is the center of the currency trading in the world? I will leave you like 1 minute for an answer. Why do you think London is the center of the currency trading in the world? Okay, my friends. First of all, I mean, there is no main reason. There is a group of reasons for this. So we have English-speaking workforce, right? We have graduates from major universities, and all of them are fluent in English, and English is the language of the finance all over the world. Then we do have place. So in London, you can trade at the end. Let me erase it. Okay, so when you're in London, you trade at the end of the Asian session and at the beginning of the American. So London is opened like this. You can trade at the end of the Asian session and at the beginning of American. So, and of course whole European session. So we can cover free markets. That's another reason. And also relatively low taxes. So companies, financial companies, move to London to have headquarters. And also, last but not least, are passporting rights, which is an issue now during the Brexit. Because in European Union, we have a law that company can operate in every member state of European Union. So you can operate in every country of European Union if you get an approval from one single country, from the financial committee, from the regulator. Okay, so companies were applying for regulations in FCA in London, and just by having a branch in London, they were getting approval, and just by having this branch in London, they were able to operate in whole Europe as well. So all that together created a situation when London is the financial center of the world. But now it's changing. You know that we have Brexit, and many companies are moving away from London. They are choosing, for example, Frankfurt, which is the second financial center in Europe. What do we trade on the Forex market? It's not only currencies, which you see here. But these are CFD contracts for example, indices. But also in Axior, you can trade CFD on American companies. So, for example, you can buy Apple, Google, Facebook, Tesla, etc., which is brilliant. Now you have commodities, gold, silver, platinum, oil, and many more. Natural gas, and on some you have also cryptocurrencies. Okay, so Forex is mainly currencies, but different brokers allow you to trade also on more instruments. How big is the Forex market? Forex market is absolutely huge. Here's the latest report from 2019. You can see all-time highs. As the options, as the instruments that can be traded, as you can see, it's not only the spot market that you can see on your platform. You have outright forwards, FX swaps, currency swaps, options, and other products. So it's a very complex market. As for the instruments on the currencies which you can trade, here is a list. So the most important, most widely traded is American dollar, and this is a comparison from 2019 and 2016. So American dollar is the king of the Forex market. Next one is euro. Then you have Japanese yen, JPY, and then you have EME. Who can tell me what are EME? EME. Emerging markets currencies all together in a basket. So Russian ruble, Polish zloty, Turkish lira, etc. Then British pound, Australian dollar, Canadian dollar, Swiss franc, Chinese yuan, Hong Kong dollar, New Zealand dollar, Swedish krone, Korean won, Singaporean dollar, Norwegian krone, Mexican peso. And as for the pairs, almost all the instruments are quoted against the American dollar. Okay, only two instruments without the American dollar are euro to Japanese, three instruments: euro to British pound, euro to Japanese yen, and euro to Swiss franc. So you can see almost everything is quoted against American dollar. Okay. In order to buy currencies and sell currencies, it's not that you buy dollars. You buy dollars, but with other currencies. So you buy dollars with euro, you buy dollars with yen, or you sell dollar and buy, for example, Swiss franc, right? So there are currency pairs on the Forex market. As you can see, first currency in this pair is a base currency, and the second one, in this case euro dollar, is a quote currency. Bid and ask price, and this is very, very important for you to understand this, the difference between bid and ask price, because when you open the platform, actually I will show the platform right now. Okay, you should be able to see my screen right now, and you have the market watch window where you have all the instruments that we have in our offer. As you can see, CFD, Facebook, here, Facebook, Apple, Google, etc. You have currency pairs, you have commodities. Anyways, there is a bid and ask price, always bid and ask price. But on the chart, you can see that you can see only one price here, okay? This you can change by going to properties, common, show ask slide, and you can see both prices, okay, 1 and 2. And let's go back to presentation. Yes, do you see my presentation? You don't see the platform anymore? If you see the presentation, then you have to remember that bid price is the price to sell a currency pair, and ask price is the price to buy a currency pair. Okay, so bid price is the price to sell a currency pair, ask price is the price to buy a currency pair. So you have, for example, euro dollar, ask price and bid price. Bid price is usually lower than ask. So you, again, I have to show you this because it's very important. Bid price you sell, ask price you buy. With this one you buy, with this one you sell. The difference between those two prices is spread. And the lower the spread is, the better are market conditions that the broker is offering. And Axior is having really, really low spreads, which can help you in your trading. Because imagine that you buy with this, okay? You buy with this, and then immediately, if you close your position, you are on loss because you close your position with this. If the spread would be smaller, so here is 1 pip, 0.2. If there was, for example, 5, 7, the spread would be 0. So if you would buy here and immediately you would sell, you would lose only 2 pipettes, 0.2 pips, not 1.2 pips. Okay, so it's very important for the spread to be low. Let's move on Here is an example of those bid and ask prices, but I showed you this on the platform. So we have bid price, ask price, bid price, and ask price, and chart is always created. Chart is always drawn with a bid price. If you want to see the ask price, you need to turn it on the platform which I showed you, which I just showed you. Now the position sizes. The position size is lot. That's a default position size. One lot of euro dollar means that you are trading, buying or selling 100,000 euros. One lot of British pound to American dollar means that you're buying 100,000 pounds. So the position size always refers to the first currency, to the base currency. Leverage. Leverage is also a very important thing in trading, because this what makes Forex trading so interesting. Because guys, Forex is not volatile. You need to, many people probably told you or you heard this somewhere, that Forex market has very, very big volatility. This is not true, because for example, shares of Apple can move 2% a day without any news whatsoever, just like this. And currencies move 0.5%, 1% a day. If currency pair moves 2% a day, it means that something huge happened. So daily change volatility is lower on the currency market. What makes it bigger is the leverage. Leverage is the idea, is the tool used in trading, which allows you to control bigger positions without having actual money. Because if you want to trade Apple on stock exchange, if you want to buy Apple shares for $100, you need $100. If you want to trade currencies on the Forex market, 100 euros, you want to buy 100 euros, you don't have to buy 100 euros, you just need 1 euro, for example, to control 100 euros. This leverage allows you to control open much bigger positions depending from the leverage. In this case, leverage is 1.1 to 100. So with 1,000, you control 100,000. Now I would like to show you the movements, right? You saw some charts. I showed you my chart. By default, it was Australian dollar to American dollar, and my position that I have on the market right now, my only position. These are charts. They can be displayed in different way. I will show you this on the next webinars. Don't worry. This is just an example of a candlestick chart where there is a downtrend. The price is going lower. Price is making lower lows and lower highs. This is a typical downtrend. Now we have a typical uptrend. So the price is making higher highs and higher lows. Price is climbing higher. Okay, and now I would like to make a few examples with this. What does it mean? Because on this market you can go up or down. Okay, you have really easy decision. You can either buy or either sell. What does it mean buy? What does it mean to purchase, to go long? So buying is opening a long position. It means going long. And for example, let's just take this example that you have a deposit of $1,000. The leverage is 1 to 100. So your trading capital with this $1,000 is $100,000. Okay, you buy one lot of euro dollar, and the price goes from 120.10 to 120.65. What you make is 55 pips. Okay, because the difference between 120.65 minus 120.10 is 55 pips. And with $1, with one lot, you will see later how much can you earn by making 55 pips. Of course, if you will not open one lot, but you will open zero point 0.1 lot, you will have also 55 pips, but the value of the pip will be lower, so you have 10 times less money. And a short position on the contrary, which means selling. And principle is the same. You sell for 120.65 and you rebuy for 120.10, and this means that you earn 55 pips, because yes, on the forex market you also earn money when the price goes down, and this is an excellent thing for traders, for your freedom of movement, because for example on the stock exchange you can only really buy. Okay, so when there is a market recession or a disastrous movement to the downside, like for example in February and March, you can pretty much only suffer because your shares are going lower. On the forex market there are no recessions, there are just occasions. So if the price is going lower, you can simply sell. You can as easily sell as buy. And sell is opening a short position. So let's see, what is the pip value? On one lot of euro dollar, one pip equals $10. On one lot of British pound to American dollar, one pip equals $10. Okay, so you can see that pip value is taken from the quote currency in this pair. Let's come back to our example. What is the pip value? The first example, when you opened long position for 120.10 and you close for 120.65, and the profit with one lot and 55 pips is $550. That's excellent if you had only 1,000. So look at this, and you made it's a movement of 55 pips, which really can happen in one day, and happens in one day, any given day, really. And you can capture these movements, you can catch those 55 pips, and you can double up, which is pretty interesting. I mean, not double up because you will have $2,000, but you can have half of your initial deposit. The same goes with the short position. With one lot and 55 pips, one pip is worth $10, so we have $550, and that's with one lot. If you would trade 0.1 lot, you would have $55. And to open 0.1 lot, you would not need 1,000, but you would need 100 only. Maybe some of you is trading stocks. And trading stocks is much easier, and you get this knowledge from school maybe, or from movies, or just common sense, right? Many people know how to trade stocks. So I will tell you a few things. How is it different from trading currencies? So again, on the forex market, you have more instruments because you can trade also commodities or stocks. Or stocks, but not in forms of the stocks, but CFD contracts for differences. Trading times. This is the best because on the forex market you can trade 24/7. So for example, if you have a demanding job, you cannot trade on your stock exchange. You can trade forex after job, before job, at night. If you cannot sleep, you can also trade. Liquidity and volatility. Forex market is more liquid, which means that prices are better and it's less volatile. Remember, forex market, despite the popular belief, in contrary to popular belief, is less volatile. Provisions and costs. On forex market, you don't have provisions on some accounts. On some accounts you do, but on stock market you always have provisions. Okay, that's important thing. On forex market you can trade provision free. Regulations. There are some dodgy brokers on the forex market. That's true. That's why you need to watch out and trade with trusted brand, like for example Axiori, regulated not by only one finance authority, but by 3 different finance authorities. Okay, so that speaks for itself. Factors influencing the price of the asset. It's pretty different, because when you trade on stocks, companies, they are affected more by the fundamentals of the company, this revenue, profit, loss of this company. But factors influencing the forex market are wider and more easily accessible, because forex market moves based on the global economies, global tensions, politics, etc. So it's much easier to know about the geopolitics, for example, or global economies, than this financial status of the single company, because it's much easier to know what in what shape is the economy, for example, of New Zealand, then what is the revenue of IBM, for example, or Intel. Okay, it's much easier to get this information about the countries, about macroeconomies, rather than precise information about one company. Abilities to make profits on the price decline. Yes, I told you this is a huge benefit for the forex market. You can sell. So we had this terrible time in February, when the prices were going lower, when the prices were going down. Stock traders were suffering, but forex traders, nothing. It's just an occasion to trade. Simple as this. Ability to control and modify the position. It's because it's open 24/5, so you can easily open, close, modify your position in the middle of the night. You have easy, user-friendly, intuitive platform, even on your mobile. So it's really, it's really easy to trade. And the leverage. Leverage is awesome because it allows beginners with a small amount of money to start trading. You can trade even with $10, $50. You don't have to wait or take your entire savings for your investment to make sense. Because, for example, if you buy stocks, shares for $10, it does not make really sense, because the profits will be very small. But $10 with leverage on the forex market can really make difference. And we are coming to an end. Traders Dictionary, you need to know some special words, because we as traders are using some special words in our trading. It will be easier for you to understand analysis videos and our videos, because we produce a lot of them, and I would be more than happy if you could watch our videos. And I can tell you that you will be happy too, because I post my trading ideas, I post my own trading, and if I make profits, it means that those ideas are good, and you can benefit from them definitely. So bulls are those who are buying, think about the positive situation on the market. Bears are sellers, those who want to earn on the asset when the price will go down. You have greenback, which is American dollar, cable, sterling, which is British pound. You have Swissy, Swiss franc, loonie, American dollar to Canadian dollar, Aussie, Australian dollar to American dollar, Kiwi, New Zealand dollar to American dollar. You have hawks. A hawk is a policymaker who wants interest rates to go up. Dove is someone who wants interest rates to go down. You have scalping, short-term strategy based on short transactions with high volume, catching small often movements. You have carry trading, long-term strategy based on the benefits from the positive swaps. Again, guys, these are just, of course, not all important words that you should know, but some of them, the most popular ones. If it is overwhelming for you or it's too much information, don't worry, guys. You have to follow us on the on the Twitter. Why to follow us on the Twitter? Because I post a lot of content there. Axiori Intelligence posts a lot of content there. And here is my, I will copy, here is my a link to my Twitter. Here is the link to Twitter of Axiori Intelligence. Really, guys, that's a free content where I, for example, record a video every day. And on this video, I tell you about the best occasion, okay? And I show you this occasion, and you can follow it if you want. You don't have to, but I tell you, it's going really, really good. And yes, follow us on Twitter. This is very, very important if you want. But what is more important, even more important, is that we finally have a super nice bonus for you, 50% bonus offer for our traders. So you can trade with $100, but why not to trade with $150, for example? So if you want this free money, go to axiori.com. If you have any questions, not related to the market, because if you have any questions about this webinar or market, please harass me, ask me. I will be more than happy to answer your questions. But if you have questions about opening an account, this amazing bonus, please write to support@axiori.com. Those guys will be more than happy to help you with your concerns. Okay, here's the disclaimer. Remember, we don't give advices. We don't give investment advices. All I'm sharing my positions, my strategies. This is just my view. I cannot force you to follow it or do anything with this. It is just my view on the market. So, do you have any questions? Please, if you have any questions, please ask. This was the first webinar with the basics. Next webinar will be, let me check, when will be the next webinar. So my friends, the next webinar will be probably on Monday. Yes, 7th of December. We'll be talking about technical and fundamental analysis. So more advanced stuff. So those who are trading already, you will be more than happy to attend the technical and fundamental analysis because I will be explaining those too. Those beginners, you should attend this webinar also because this is where the serious stuff starts. Okay, no questions. This is very interesting. It means that it's good because you understood everything, which is pretty awesome. So again, if you want to know how to trade, follow us, attend our webinars, and if you want to start trading, well, we have this 50% bonus for you. I think it's a good way to start your trading. Anyways, maybe you don't have questions now, but you can ask me later on Twitter, for example. Yes, I'm aware of those problems in India, but maybe I think you can contact support axiori.com and they can help you with access to the whole market, not only those with Indian rupiah. Which platform? Of course, MetaTrader 4 with Axiori. How do I demo trade with Axiori? It is very simple, my friend. So in order to trade with Axiori and receive this 50% bonus, you just go this link and you register here. And my friends, at the end of the webinar, you will be asked to rate this webinar. I appreciate your honesty. I don't need you to say that it was the best webinar, but please rate this webinar. I would like to see your opinion about this. And no more questions, then thank you very much. That was just an introduction. Remember, on Monday we meet again and we talk about serious trading stuff, so technical and fundamental analysis. I cannot wait to share my knowledge about this because I love trading. I love to share knowledge about trading, share my trades, share my view about the market. I absolutely love it, so I hope you will be here on Monday. Thanks very much. All the best, guys. It was a pleasure to be here with you, and see you soon.